Do you ever wish that there was a guide of simple steps when it comes to investing, so that when you took the first step into the world of finance, you could follow some steps from the get-go? Well, in this video, we're going to talk about the 5 principles of investing that have been used by Howard Marks, the famous billionaire, and how these can be applicable to you. In our channel, our mission is to help you build your wealth and manage your finances effectively. So without further ado, let's jump onto the principles. One of the most important principles is the principle of the relationship between the price and the value of the investment. Investment success doesn't come from buying good things, but rather it comes from buying good things well. And therefore, the best investments are those that you buy them at a price below value. This is the most dependable way to make money in the long run. As great investors have repeatedly said, time and time again, you should always buy when people are panic selling or when there is blood in the streets, and you should keep selling when people are buying manically and the hype is there. Now the climate has been reversed. Everyone is talking about a recession in the horizon, and actually we are in a recession at the moment. So it wouldn't be any better time than this one to dollar cost average your way in any market. May that be the S&P 500, may that be gold and silver, may that be Bitcoin. Always remember, you should only invest what you can afford to lose. The second important principle is understanding risk. Investing consists of one main principle, and that is trying to predict the future. But no one can 100% predict the future, and therefore risk is something that no one can escape, even Warren Buffett. And therefore, once you understand this, you minimize your expectations and you are realistic with what you want from your investments, and you keep yourself into a system of checks and balances without being unreasonable. The third and one of the most important principles is that you have to pay attention to the cycles. Remember that most things will prove to be cyclical, and therefore the greatest opportunities for gains or losses come exactly at that moment, exactly when people forget that everything is cyclical, and in a desperate attempt they sell everything because they think that these numbers of the all-time highs will never come back or it will never repeat, and that's when they lose, because they forget that everything is cyclical. Nothing goes in one direction forever, and therefore you have to be conscious when it comes to investing that the chances that you think you lost will always repeat themselves in one way or another. The fourth principle, and equally important as the previous one, you have to be aware of the pendulum, as I like to say it. Investment markets follow a pendulum swing between euphoria and depression, overpriced and underpriced, excitement and desperation, and you always have to be really mindful of these feelings and emotions and circumstances, and you always have to not get too high or too low. You always have to be stoic with your movements and the way you invest when everything goes out of hands in terms of feelings, emotions or news. So when you find yourself in the middle of something like this, remove your emotions completely and try to be as rational as possible. And number 5, one of the most important principles that I follow to this day, and it has helped me make more money than I've ever imagined, is the principle of thinking like a contrarian and going against the tide. And what do I mean by that? When it comes to investing, you will never make loads of money by buying what everyone else likes and what everyone else is buying. Real fortunes in investing are created usually when buying what everyone else underestimates and pays no attention at all. So for example, if everyone collectively is pumping up a stock, then you should be very mindful, and then you should be very careful as to why that's happening. And at the same time, likewise, if everyone is dumping a stock collectively, then you should be able to be in a position to strike and have cash on the side to buy in this opportunity. In general, you have to be a contrarian and you have to go against the mainstream thought and the mainstream way of buying things. Now, this video will not be enough on its own. If you want to 10x or even 100x what you've just learned on this video, make sure you watch this video here, where you're going to learn about the 20 leadership traits that can be used to skyrocket your success in business. See you over there.